All right, traders, welcome back to this week's market breakdown. Coming into this week, the market still feels very active rather than directional, same as the last couple of weeks. We're not seeing clean, sustained trends across the board. Instead, we're getting shorter term moves, shifts in sentiments, and a lot of rotation between assets. Last week was a good example of that. We saw moments where equities looked strong, then pulled back. Yields started easing slightly, which supported gold, and the dollar didn't really establish clear control. So overall, it wasn't one-sided market. It was more about positioning and timing rather than just following a trend. And that's really the key theme right now. Markets are still trying to figure out the bigger picture around interest rates and economic strength. Because of that, every piece of data, every shift in sentiment gets priced in quickly and then often retraced just as fast. So as traders, this is where you need to adjust and adjust your expectations. This isn't the type of environment where you can just jump in and expect continuation. It's a market where patience, precision, and timing matter a lot. And what that often leads to is to frustration and for a lot of traders, making bad decisions. So you might get your direction right, but your timing wrong, or you enter slightly early, price pulls back, and then you moves without you. So this week, especially, it's important to stay focused on execution rather than just bias. Now looking ahead to this week's volatility, it's still very much on the table, not because we have a clear trend forming, but because there's uncertainty and it's still there. And when the markets are uncertain, they move sharply around key movements and settle back into ranges. So the focus this week shouldn't be on predicting the market. It should be understanding where the market is likely to react and being ready when it does. A big mistake that I find traders make is this type of market is forcing trades in the middle of nowhere, and they're getting trades too early. Taking entries without clear structure, without confirmation, just because you feel like you need to be in a trade, this is where you can really blow accounts and make mistakes, so you need to avoid that. If we look at gold, it's still holding relatively strong overall. It's reaching a lot of yields and general risk sentiments, so any shifts, they are going to translate quickly into gold moves. So for gold traders, it's less about predicting the move and more about reacting to how price behaves at key levels. On the indices side, we're starting to see a little bit of momentum on the higher time frames. Structuring is still intact, but price isn't moving as cleanly as it was before. This is typically where market transitions from strong trends into more choppy conditions, and that's where a lot of traders get caught, trying to force continuation in a market that's starting to consolidate. And then with the dollar, there's no real dominance right now. It's a strong trending environment for the USD. It's more about relative strength between pairs, which makes executions more technical than directional. So you'll often find that clearer setups coming from structure rather than news-driven momentum. So overall, the message for this week would be you need to be in a reaction-based market. We are in a reaction-based market, so you need to be reactive and not predictive. You want to be patient, so let price come into your areas and avoid forcing trades in the middle of the ranges. For funded traders especially, this is where your discipline separates you from the rest. You need to be in the market. You don't need to be in the market at all times. You don't need to catch every move. You need to execute cleanly when your setup is there, manage your risk, and protect your account. Because in conditions like this, overtrading is what gets people into trouble. It's not when you miss a trade, it's when you overtrade. And if you can stay disciplined through weeks like this, you're putting yourself in a position to capitalize when cleaner conditions return, and also capitalize on the momentum at the moment. Ranges sometimes are easy to trade. So let's jump into the charts. We'll start going through what's on the charts this week. We'll analyze a couple things. That being said, let's look at what news we have this week. We do have quite a data-heavy week ahead of us. So obviously we must just make sure that we are looking into when the news is dropping and make sure that our positions are, well maintained. As we know, price can be quite volatile in these news events. So sometimes stop loss levels, might not take at the level we want. How I like to trade in heavy news weeks like this is firstly, take profits where you see it. If you have a big news event and if your position isn't in a nice buffer in terms of position size is a bit smaller, stop loss has a bit more room, or you're in quite a nice bit of profits, then you can let your trade run. But I like to ideally be out the markets when there's news like this. Or if I am trading the news event, then it's fine, trade the news event, but just know that there's some extra volatility, which happens when news events drop. So this week, I would say the biggest days, we've got Monday. Monday is quite a big one with the ISM services, PMI. We also have Tuesday. There's nothing really to worry about. I personally wouldn't be worried about Tuesday. On Wednesday, we do have the FOMC minutes. Now, we know that FOMC moves extremely volatile. It will be a big one. I will possibly be live for this one on Wednesday. I will go live on our YouTube. So we'll come in and trade gold and we'll see what's happening. So looking at Wednesday, that would be a very, very big one. I would say if you aren't particularly trading the event and you're trading something that has something to do with the US dollar, definitely either stay away or make sure that your positions are managed. That being said, we've got on Thursday, we do have some more core PCE. Friday, we have got the CPI. So it's going to be quite a news heavy week. And yeah, there's going to be a lot of movement this week, a lot of movement based off the news, based off the geopolitical events that's going on. So let's look at the charts. First off, we've got the dollar. The dollar has been on the rise. As we can see here, we have been in this channel. We would like to see the dollar break out of this channel. It will really open up the markets for us in terms of other news and what's happening. But that being said, anything can happen. We could stay in the range for a bit longer as investors are, not certain on where they want things to go. So if we do see the dollar break out to the upside, we will then see Euro USD drop, GBP USD drop, gold. It could still stay at the highs and still continue bullish, but in theory, gold will drop. Indices will then start to pick up as well. So it's definitely something that we're sort of waiting on to see what's happening with the dollar. Are we going to get out of this range? It is one of those things where we're kind of waiting, but if we do stay in this range, we can expect price to be choppy all round. Now, this doesn't mean that there's not any setups there. As you know, in choppy markets, there's a lot of setups, just not long-term setups. So there isn't those swing trading setups. There's more intraday, in and out. Take your trade, get your take profit, and get out the market. That's the best way to do it. That would be the easiest way to trade. So looking at the dollar, we could expect things to still stay in this range. If we do break out, then we know how to trade it. Gold, this week on gold, a lot of investors are looking at sells. I know a lot of traders that were looking to sell. I actually caught some sells myself this week. But this week on gold, as it stands, I would say that we are following some good market structure and price has a deep pullback. If we are to go in a direction, I could potentially see some buys coming in. But that's more on the longer time frame. Obviously, on the short time frame, there's opportunities on buys and sells all round. That being said, if we do break these lows here, we could potentially see the continuation of the downtrend. Looking at indices, we have been quite bearish on them, but as you can see here, some strong signs of reversal. So we've got the start, pullback, a little bit of a push up. Now we've got the pullback. If price breaks this low, we could then see the continuation of the bear run. But if we break this higher, then we can expect price to continue. That being said, all dependent on the dollar. Looking at GBP USD, naturally this will drop even more if the dollar does break out of that range. Same thing for Euro USD. We will break out even more once we break out of the range. Euro USD, we've got this level here. That is quite a nice area of resistance. As you can see, we've got some resistance coming out showing that price doesn't want to break above this level. Even if we drag it along, you can see that price has stayed in this range for quite a bit. So if we were to see the dollar break out of the range, especially going to the upside, we would see these lows being taken and potentially the continuation to the downside. Looking at alternate pairs, we've got GBP JPY. Nothing much has been happening here really. We can see that we're also in a bit of a range here, but I would say overall bullish at the moment. This isn't good though. As you can see, it's a bit of a signs of reversal, and we are starting to see some signs of a bear run coming in. But this week, if we had to see this high getting taken, we could expect price to push the highs. Obviously, a lot coming in from there with the Japanese, with oil and everything like that. So a lot to expect this week from that. Looking at our crypto, at the moment the crypto scene isn't very bullish. A lot of people are just trying to average dollar cost average into their positions. I've also been putting some money in just dollar cost averaging, and I would say not bullish yet, but when we do flip bullish, it might be quick. But overall, markets at the moment, there's a lot of opportunities, a lot of places where you can take trades that are A+ setups, get good trades, and really get some good returns in. Just make sure that you follow your plan. Don't revenge trade. In markets like this, revenge trading is the worst, because if you're wrong, you are wrong. Revenge trading is just going to end up blowing your account. And especially if you revenge trade where you take the opposite side, because your direction could be right, but your overall entry point and time that you've taken your trade could be wrong, and then you flip in the whole time, and it can be problematic. But all in all, I think we're going to have a good week ahead. I wish you all the best, and trade safe, trade smart. Cheers, everyone. See you in the next one.